All right, hey there. Good morning, everybody. Christopher with Texas West Capital checking in with you just a few minutes after 11 a.m. Central Standard Time here on Friday, the 29th of January 2021 in San Antonio, Texas. Hopefully, y'all are doing well there. It's a pretty nice day here, as you can see, kind of nice and bright and sunny. Hopefully, where y'all are as well. Who's here already? Let's check in with you, man. We've got Ari's here. What's going on? It says crazy week. It has been a crazy week indeed across the markets. If you are a trader, it has been an amazing week for you. Or it had the potential to be an amazing week for you. If you're an investor, you don't like volatility. You just want things to kind of steadily move up. But the volatility, if you're a trader, that volatility is what you want. It gives you opportunities. And remember, being a trader is all about the opportunities. Hey there, Guglielmo. Good to see you, buddy. Scott's here. Navlusian. Rossmark is here. Hank, what's going on, man? Aramis says here, can't wait for my take. I don't know if it's all that great, but sorry you're having a rainy Los Angeles day over there. Hopefully it'll clear up for you. Let me see here. Data's here. What's going on, man? Sir Hold is here. Budman's here. Bitcoin AGU 3000 BTC. Hello there. Good to see you checking in. Let's see here. Jeff D says, hello, was just thinking if Robinhood allowed sell only, who was buying? Oh, good questions, right? Hey there, Train. Good to see you as well. And hey, Diord, can we look at Doge shares today? With the wink, I'm not sure if you really are serious about the word shares. If you are, welcome to crypto. They're not called shares. They're not stocks. If you're giving a hard time to the people who are new to crypto, then okay. But yeah, remind me a little bit later, and we'll see if we can get into it. I'll get through all the stuff I want to talk about first, and then we'll look at some possible requests there. Sure. Hey there, I can't even say this. Dominicus, we'll just call you Dominicus. That's the easier of the two parts to your name you've got there. How are you doing? Onyx King's here. Gerben, what's going on? Excuse me. No worry, man. That's why, again, I understand not being able to get live. That's why we always archive everything. So that way, especially if you're in tier 3, you can see everything that we do there. The weekly live stream, educational stuff that we do. You're able to access it when you have chance. Because, again, all our members from all over the world, those of you that don't know, we've got members from all over the world. So especially for things like our Bitcoin channel and others, it's popping all day and night long as everybody discusses things from their time zones. So yeah. Hey Dior, just a joke. Okay, that's what I was thinking. Okay. Greg, good to see you. Good to see you here. Oh no is here. Thanks for your rational takes as ever. Always learn. Hey, I appreciate that. I'm glad you see it as that. Again, guys, before we get going here, I just want to make a quick note. A lot of times when people are new to trading, or new to me, or if they've been watching me for a while, but they're just very emotional. They've not made that leap from being a retail trader to understanding what's really going on. They'll often take the things that I say as bearish or bullish or whatever. I do have my biases at times, but in no way do I ever trade biases. I trade based where the chart is. That's why with y'all, especially in TWC, you get both sides of the trade. I say, okay, well, it's looking like it's going to do this. So if it does this, then we're going here. But if it doesn't get to this point and validate it, or if it drops down here and invalidates it, then we're going the other way to at least this target here. So that way you always kind of have an idea of what the market's looking like in either way and where you need to be looking, guys. This idea that at any one time you can always know where the market's going is nonsense. Traders, new retail traders, they come in and they want guarantees. Because they don't know what's going on in the market. And they want somebody to guarantee them the price is going to, to buy here or to sell here, and that price is going to do what you say. But that's not the reality of being a trader, guys. It's very much the opposite of that. Trading is speculation. And speculation, by definition, incurs risk. So if you have risk, then there is no guarantee. You see how this works? So the sooner you guys can get away from the idea that you're looking for somebody to guarantee some movement, honestly, the better off you'll be as traders. If you're always thinking that people are, if somebody guarantees you something and you follow that, you're going to lose more money than you're not. Heaven forbid you get lucky at the beginning, because then you're going to think that person or that way of doing it is always correct and it's the way to do it. And what that means is you'll lose all your money. I can all but guarantee that. So just be careful out there when you guys are looking at that, all right? Let me see here. Doge going private at 69.42. Hey there, Dennis. Good to see you. All right, guys. So, hey, listen. Here's the thing. We offer an amazing educational opportunity for you guys. You can join us right now at howtotradetowin.com for 25% off. This is only good for the next couple of days, only through the end of the month. So, we've had quite a few new members starting in this week and last week. It's been great. Come on in. I just had a member actually mention to me in private message yesterday that they made over $6,000 on one of the calls that we do. One of our setups that we do. This one was NKDE or NAKD, Naked Brands, and so we've actually got members that have been making a killing off that because we've been trading that for the last I guess probably 4 months now. From down toward the bottom that it was at, and it's just been an amazing trade. Made lots of money off that. But again, I'm telling you right now, if you're going to join us, or if you're even at a lower level, if you can afford to do so, jump up to tier 3 for 1 month. See what we're doing there. I'm telling you guys, you got weekly educational streams. You've got a ton of educational content. You've got chart requests and chart critiques and all this other stuff. So come on over here to howtotradetowin.com. You can check it out. But like I said, through the end of the month, you can get anything we're offering on here for 25% off. So do it while you can, all right? There we go. I'm done selling y'all. Again, I think it's a great thing. You can talk to people. We've got people in here in the thing right now that have been members. There's a reason our members tend to stay well over a year with us. Many of our members, believe it or not, we've got a decent amount of members that have been with us since we started in August or September of 2017. So going on, over almost 3.5 years. That's crazy. Love y'all, man. Anyway, let me see here. Before I talk, let me see. I've got a question. Hey there, Crypto Girl. Good to see you. Connell, what's going on here? You said, I set a stop loss through Kraken last night, but it unfortunately didn't execute. Hugely frustrating. Is this common in your experience? Any thoughts, guidance you can provide on best practices here? So, on Connell, Connell, on Kraken or any other exchange you're looking at, it depends on if you're setting a limit or a market order. If you set a market order, then it will trip. Here's the difference. If you set a market order on your stop loss or your take profit or whatever, then what that says is, okay, when price gets to that level, it'll trip. And then as soon as it goes through the orders in front of you, because, it fills orders in the order in which they're added in. So as soon as it gets through all those, then it'll fill yours. It might or might not be at that level. Price may move too fast. There may be too much volume before you, and it might take price higher or lower before it does. If you're doing it at a specific level, like a limit order, then you're telling it, listen, I only wanted to exit my trade here at this level. If it can't fill your order at that level, then it doesn't do it. And I'm thinking that might have been what you did there. So check and see if you did a limit order or a market order. If you did a market order and price goes through that level, it should exit your trade as soon as it gets through the orders prior to you. So yeah, I'm thinking that might be what happened there. Hey there, TV Canal. Good to see you. Alex checking in from Fox Lake, Illinois. Good to have you checking in, man. Hey, Brian, man. Happy Friday, buddy. Connell, you're very welcome, man. You're very welcome. All right, guys, let's jump in here. So here's what's been going on. So Bitcoin here. Let me remove. Let me do this here. You know what? Let me get this one put over here as well. I've got all my Elliott Wave stuff here in this right here. Oh, let me get this one right here as well. Which one's this? Put these on this morning to give you guys some ideas of what may be going on here. Okay, so here's the... Actually, you know what? Let me go ahead and get this and put it in there as well, because I just want to talk about the structure here for a minute. And then this one up here. All right. So, if you've been following us, then you know, because I've told you and I've explained it, that this is a bearish market structure right here from the all-time high up here on January 8th. Now, what makes it a bearish market structure is that you have a high and a low, a lower high, and a lower low, okay? So you've got consecutive lower highs and lower lows. That is bearish, okay? The only way this becomes a bullish market structure here is if price gets above this last lower high. So price has to actually, it doesn't have to close above it. It just has to get 1 penny above here on Coinbase, 40,127 and 66 cents. All right. Until it does that, this is still a bearish market structure. Again, because there is no higher high. So how do we, well, you go here and you go, okay, well, there's a high, there's a low, there's a lower high, there's a lower low, and now there's a lower high. Maybe. This is not a lower high until you get a lower low. Because think of it this way. If that was true, then you could go, okay, high, low. If it wasn't true, then you can go high, low, lower high, lower low, and then you go high, low, higher high. Well, in terms of this overall structure here from the 8th, that's not correct. There is a local, potentially bullish structure going on right here because it's a low, it's a high, it's a higher low, and it's a higher high, potentially. Potentially, because if this continues dropping down below this swing low here, all of a sudden this isn't that anymore. If price here drops below this latest lower low here, which is 28,732, all that says is high, low, lower high, lower low, lower high, lower low. It's still bearish. Okay? So we're kind of sitting here right now. And so we have this huge move this morning. We had this huge move up because Elon did this. He said, oh, look, Bitcoin. He put that on his bio. And so everybody's assuming that Elon Musk is all in on Bitcoin and that's all there is to it. He may be, but we don't know. First of all, we don't even know if he bought any. Second of all, if he bought any, we don't know how much he bought. Third of all, even if he did buy some and we don't know how much he bought, we don't know what his intentions are. Fourth of all, even if his intentions are to hold, he's an emotional human being like the rest of us. And those emotions will put his desire to hold into question if price starts dropping significantly. It doesn't mean he'll sell, but it means just like you and me, he's got the same emotions he has to fight and he has to do through. So even if he gets in saying, yeah, I'm going to, we talked about this with Sailor. Even if they come in, even if they really believe, yeah, they're going to hold, are they really going to hold if they're losing 50% of their value? Especially if they've got a significant sum in there. And the odds are, human psychology tells us, no, they're going to change their opinion. They're going to change their ideas. Okay? So there's a lot of ifs in here. Now, we also know that old Elon knows that he can move markets. He's been testing that out over the past, year or two? Doge and other things. Matter of fact, if we look at his profile here, we look here, and before, let me see here. Let's see here. Look at, he's making another one. Look at, I kind of love Etsy. I haven't looked yet, but I'll bet you Etsy popped on that. In GameStonk, he says this, and that helped it go up higher and get even more interest, So he knows he can move markets. Now, I think with the advent of social media and the ability to have your opinion dispersed so widely, so quickly, I think, at least here in the U.S., that the regulators are going to come in, or not the regulators maybe, but Congress is going to come in, and they're going to pass more laws to kind of limit your ability, or potentially, or even the agencies will, the way they see it, your liability. They might, if you're Elon Musk and you've got 44 million followers and you've proven that you can move a market just by mentioning a word, they might consider that manipulation, market manipulation. I don't think it is at the moment. But I think you've got a potential argument there. Again, in the U.S., everybody's like, "Oh, it's so illegal. Oh, the law says this." No, the law rarely says what you think it says. Anybody that's been to law school, anybody that's graduated law school, you know what I'm talking about, right? What you learn in law school is that the law is very gray. The way the law goes is based on interpretation. And a lot of the interpretation, the way they're going to continue to interpret it, is based on how it's been interpreted by courts in the past. But you can present new and novel approaches to it, different ways of looking at it that might get the court's attention and have them change it another way, but only in a specific set of circumstances. So that's why we have so many lawyers here in the U.S., guys. If the law was really as black and white as we tend to believe it is, we read something, we go, well, that clearly it's illegal to do this, or it's clearly legal to do that. If that was the case, we wouldn't have as many lawyers as we do. But we have the number of lawyers we do because the law is so gray. It's open to interpretation. And the presentation based upon facts specific to your case can cause a branch decision that if there's a similar case in the future with similar situations, they would follow that court ruling versus another one. So there's a lot going on there. So don't assume that anything's illegal or illegal just because you read the law and go, oh, well, the law to me clearly says this. It's a lot more complex than that, believe it or not. So I think, with things like WSB going on right now, Elon Musk, Saylor, being able to move markets with the things they say, I think that the U.S. Will come in there and kind of tighten up the laws a bit. And I think it's a good thing. Because the idea, guys, in any market, you need the market to run smoothly. And the more volatile that market is, this craziness going on with GameStop and AMC and these things like this, with all that craziness going in there, it affects the market's integrity, the ability of the market to function correctly. Remember, in order for the market to move fluidly, you need market makers to come in there and provide liquidity. Well, if you have these sudden huge boosts like this going on there, and this becomes more of a consistent thing, the market itself becomes very difficult to operate in. Very difficult. And if you thought it was hard to make money before, we want volatility, but we don't want that kind of volatility because it becomes even more difficult for you as a retail trader to make any money. But, again, there's all this stuff going on that retail traders don't know. And so they assume that, oh, this is terrible and that's terrible and whatnot. But really, the thing itself has to run smoothly in order for things to work. Otherwise, guess what, guys? You may want to get in at $10 on something and you might put in your order there, but it might not get registered until you might not actually be able to get in until it hits 20. And then at 21, it reverses and drops right back down on you. Next thing you know, you're instantly liquidated or at least significantly in loss. The market maker, the ones who provide the liquidity in any market, are the reason why you're able to buy generally where you want to buy and sell generally where you want to sell. Without them, there's not always a matching order anywhere nearby. And so the market would have to move until it finds that matching order to fill you. And that's what we call slippage. So there's all these things you have to think about when it comes to the markets and whatnot. And but at the end of the day, is what going on here going to, are the little guys killing the big guys? Are things going to change for the better for the little guy? No, I don't believe that, guys. Because the market has to work as it works. If it doesn't, if it changes, then the very fabric of everything in the economy changes. And if you think things are not so great right now with the economy, if something like that's to happen, the economy's really going to go to hell. So it is what it is. This is why I always teach to traders what I've been teaching them for, well over 10 or 15 years now, is that you have to understand how the big boys play the game. And then what you're trying to be is a pilot fish on that shark. You want to eat the crumbs, man. You want to eat what's left over. Because you're not going to beat them. There's no reason Melvin should have gone down, guys. They should have, God, my God. If you're shorting that heavily to a degree, there is absolutely no reason that you shouldn't have protective puts on there. Options. It's very cheap insurance. Had they had that, they'd be perfectly fine. But apparently they didn't. or at least nowhere near what they really needed to have had. Now, you're not going to find that happening with most of the big boys, guys. Most of the big boys, they take their risk management seriously. Again, I have no clue what happened with Melvin there or why they appears that they didn't have that. But, if WSB thinks they're going to bankrupt all these different hedge funds, they're in for a rude awakening. And beyond that, you can also see what's going on with the markets as it is. They've, look what happened. Robinhood goes over and says, listen, we're going to limit your ability to do something with these stocks. Everybody else joined in, Webull, Trade, Ameritrade or whatever. I mean, all these guys jumping in there and doing that. Everybody's like, oh, it's illegal. It's illegal. I think they've probably got a good argument that it isn't. Otherwise, they wouldn't have done it. I think they have to believe they have a case for it not being illegal. Otherwise, doing it, just basically, doing something illegal like that could potentially just put them out of business. In the case of Robinhood, they beefed up their securities team earlier this month because of the other stuff they're dealing with. So, I have no doubt all these companies ran it through their legal teams to make sure that they've got some kind of ground to stand on if they're going to do it. And I think a lot of it hinges on the toss. What are they? If they're margin accounts, then you know what? They're probably perfectly fine with what they did. Now, that doesn't mean Congress won't try to come in there and maybe change some laws or something, but it means that likely it's not illegal what they did. We'll find out. But, instantly everybody's jump up because they feel like they've been taken advantage of. But most of the time when retail feels that way in life and anything, it's because they didn't read the terms of service of the platform they were using. Everybody gets upset. Oh, Trump was, banned from Bitcoin or banned from Twitter and banned from Facebook and all that. Oh, it's illegal. What happened to free speech and whatever? Well, I agree it's in bad taste maybe to limit, their ability to speak. But at the end of the day, it is a private company. And what the private company does, they can keep you from saying so. It's like your work. You go, oh, well, I can say whatever I want at work. No, you can't. You'll be fired if you say something negative about your company. Often. Because that's bad business for them. That hurts them. Why would the law say it's okay for you to say bad things which may or may not be true about the company? The law's not going to protect you there. Generally. Again, all these things are generalities, guys, because the law is, very gray. And it depends on how you present it, the facts that you have in your case. So just some thoughts on that, guys. I want to be very careful because at the end of the day, here's the reality of it, guys. Market tops come when the news is good and everybody's excited and they feel like they can't possibly go down. Market bottoms occur when the news is all bad and terrible. People don't believe that the market can actually ever go up. Right now, everybody's feeling positive. Look at what WSB did. Woohoo, they're taking out the big guys. Everything's going up. All we got to do is jump in with them and do what they're doing. Bitcoin. Oh, look, Saylor's in. Oh, look, Tudor's in. Oh, look, Elon, it looks like he's in. Oh, look, all this, man. There's no way this can go. This is great news. Look, regulators are saying it's great stuff going on here. And all this regulation is going to bring in even more money. It's all great news. I mean, that's kind of where we're at right now. So while it may or may not mean, I'm not here trying to say that the market top is in because we don't have any confirmation on any of the markets yet. Not yet. But I'm saying that this is a time when emotions are running hard in the markets. And if you're in there, especially if you're paying attention to social media, as a trader, you need to make note of what's going on so that you don't get pulled into the emotion side of it and forget to look at everything else. And here's what I'm talking about. So Bitcoin. Everybody wants to be very excited about this move up. So what have I been talking to Discord about? I've been saying, okay, well, listen, this could be an ABC down here, and we have further up. We've talked about this since we've been coming down. We've also talked about the possibility of a 1, 2, 1, and originally it was 2 here, but it could still be 2 up here, okay? So we can have a bearish 1, 2, 1, 2, or a bullish ABC, and then from here we're going 1, 2, 3, 4, 5, heading up, okay? Neither one of those is programmed in or guaranteed at this time. So what did I tell Discord? I said, here's the thing. when we were down here, I said the first thing we need if we want to become more and more bullish is we need an advance at a close here above the pivot and continuation up. That's the first thing. Second thing we need is a close at advance above this swing high right here. This is excuse me, sorry about that. It's live. I can't edit that out. But this 34,888 here. That's the second step. We need to move above that. And I said, if we get above that, I said you can start feeling a lot more bullish at that point. You can't be just blindly bullish, though, but you can feel more bullish. And what it means is once you get above that point, your initial target is this descending channel resistance. Small targets. There it is. If we get above that resistance, then that produces a possible pattern target here based on the height of this channel of just about $11,000 above the point of breakout. So that puts us up here at almost $47,000. All right? So there's the possible start of the bullish side to there. Pattern targets and all, okay? But until price actually gets above this swing high here, it is possible that this is a 1, 2, 1, 2. And this right here becomes a flat correction. You get an ABC up for A, ABC down for B, beyond 90% retracement. And then you have 5 up for C. And you get a 1, 2, 3, 4, 5. Not only that, but if you look here, what do we have? We've got a TD sequential. We've got a 9. Now, a 9 in itself isn't necessarily a big deal. It means a pause, at least, usually. Potentially a reversal. Now, what gives you more confidence in the idea of a possible reversal? Well, does that 9, in this case, a 9 on the advance, a bullish 9, so it would be a sell 9, does it come at resistance? Well, yeah. It actually comes right here at the R1 pivot. And I want you to look. It closed, it wicked up, but closed back down below that R1 pivot on the 4-hour. The next one wicked up a little bit higher and closed back down below the pivot. This third candle, so this is 4, 8, going on 12 hours here. We got another 2.5 hours left, 2 hours and 25 minutes in this candle. But it is opening below that pivot, and so far it's closing down further. This is a significant area of resistance. So it increases the odds, it increases confidence that there might be a reversal from here. But again, it doesn't guarantee it. If we zoom out here again, I've been talking to Discord a lot about the 4-hour and the daily time frame for this particular reason. If we look here, notice, oops, I hit the wrong one here. I didn't mean to hit that. Okay. Notice right here at the R1 pivot. Again, notice where you find the resistance right here. And then it's support, and then it's resistance again. So I've been telling Discord another way to look at this on a larger time frame is you need a couple of probably at least 2 daily candles closing above the R1 pivot. So what you need is your candle to close above it, which we got yesterday, and then you need your next candle to follow through, which we may have today. And this will make, it doesn't guarantee, again, you still need to get above this swing high up here, but it helps build that case for a bullish narrative, okay? If today is to close back down below the R1 pivot, guess what? This R1 pivot area right here continues to hold as resistance, even though you closed above it yesterday, because all you did was push up and then close back down below it today, potentially. If we zoom in here, let me see, if we zoom back out here to the 4-hour, make note of where we actually stopped right here. I've talked about this area up here before. I've talked about the importance of this area up here, this cluster of supply side activity that happened up here from January 8th to basically January 10th, right here. Because what's happened is you had the first candle up there, boom, got rejected. Big move down, came up. This comes in, a couple of 4-hour candles here, and boom, sends back down. Here we are again. We didn't even barely hit that resistance area right there. That's this line. And it was rejected pretty strongly. Now, how do I know it was rejected strongly? Because all you have to do is look at volume. Look at this large, we have this large spike of volume in this large candle spread. That's the body of the candle. This is definitely demand coming in. Here's the problem. The next candle right here, Look at the volume. It's not quite as large as this, but it's still a spike above what the average has been, above the other spike areas. But look at how small, look at how tiny that candle spread is. You have a candle spread here of almost $5,000, and then you have one here of about $70. And your volume is within the same area of largeness, right? So what does that tell us? That tells us that you had a lot of demand coming into here, but the minute it gets into this area right here, all of a sudden you have God's own foot full of supply coming down on you. Now this doesn't guarantee that price is going to reverse and head down lower, but if you are not paying attention to what's going on with this volume and price action right here, you're not planning to win, you're planning to lose. Okay? You have to acknowledge what's going on here and understand it, and then watch as things develop after that. Because this is significant. The ratio between volume and candle spread is significantly less in the second candle than it was in the first. Which again tells you that most of what came in here in terms of that volume increase was a growth. Like, okay, if this candle right here, this first one, if this was 90% or let's say 80% demand and 20% supply, in this one right here, that became a 50-50, pretty much. So even though there was less overall volume, it was still significant. But what's important is the ratio of demand versus supply in the second candle. It's telling you that people are trying to unload here. Now, who's trying to unload? These guys right here. They're trying to protect their shorts. Who else is trying to unload? People that missed this the first time around. This came back up here, and you had additional short sellers enter right here, which is why this went here and sent down. Maybe somebody missed that right there, and they're still not feeling too positive about this. They're getting the opportunity to short at this same area now. So who's shorting there? That's who's shorting there. It doesn't mean that price has to go down and end out, but it does mean that you have to pay attention to what's going on there. So this is kind of where we're at. So what are we looking at? We're looking at this right here, guys. We're looking at a possible, the black count, this 1, 2, 1, 2, or potentially the red count, A, B, C, and then we've got a 1, 2, 3, 4, 5. If it's the red count, then we should expect price generally to kind of, maybe up there. It's a little bit short, but we usually look for it to reach the 38.2. So to retrace 38.2% of wave 3, which is right there around 35,080. So we should expect for it to come up there and head on back up if that is the case. However, if it continues going lower than that, well, we can look at the 50%. As many times, if it goes through 38.2 on a wave 4, it'll go to 50. The thing is, if it goes to 50, that takes wave 4 down into wave 1 here. This wave 1. The only way that's valid is if this is a leading diagonal. That's the only time wave 4 can overlap wave 1 is if it's a leading or ending diagonal. Okay? So it doesn't necessarily invalidate the idea that this is a 1, 2, 3, 4, 5, but you should, if you're dropping down below the 38.2 toward this 50, you want to start feeling maybe less bullish and more bearish potentially. If it continues on down through there, I would really start feeling a lot more bearish. But what you need to see is a decline through this swing low down here at 29,156. If you can get below that, then this idea that this is bullish is no longer. This is definitely a bearish count. And it's likely a 1, 2, 1, 2. And the thing is, if this is a 1, 2, 1, 2, then that means there's a lot of downside coming. Because this 1, 2 right here is subdividing wave 3, which means wave 3 is going to overextend. It's going to go further than 1.68 times wave 1. But for right now, we don't know which way this is right now because we are between the levels we need to be. We're between the swing high up here at 40,127 and this wave B down here at 29,156. So what does that mean? That means if you're trading, you take the short here. You take the short because in either case, price is expected to decline a bit. So you're short, you're good, you're making money. It doesn't mean, oh, I don't know which one it is, so I don't enter. Nah, in either case, you're going down first anyway. So you come down here, and as you're getting down to this 38.2 area, you look for signs that maybe it's done, ABC down, it's done, and it's going to reverse and head back up. And you can get out of your short and go long. And then you can feel more confident about your long when you get above that swing high there. Then you can start looking at this pattern target up here around 47. But if you're short here and it doesn't come down as an ABC here and it continues down, well, you can continue to hold your short and you look at the 50. If it continues coming down there, guess what? You're still short, so you're still making a ton of money, even though it's no longer bullish. And it's definitely looking much, well, it's still potentially bullish, but it's looking a lot more likely to be bearish at that point. That's how you trade that. Simple as that. There's no reason you shouldn't go short right here. In either case, whether the bearish or bullish case, it's coming down first. Anyway, you should be able to lock in profit on that, at least. So I say this because not a lot of times, sometimes new traders will come in and they'll be like, oh, you're just telling, look, it could do this or it could do that. Oh, that's real big of you. No, it's the reality of it. I can't tell y'all how to trade. The things that make you who you are as trader investors are up to you. And every one of us is different. What may be a good trade for me may not be a good trade for you. There may be a better option for you. But what I can tell you is, listen, this is what's going on here. So your likelihood of success on a short right here is significant. You don't have to know whether it's going to go up higher or it's going to come way down here. All you have to know is right here it's going down. And that's what happened. This is how you trade successfully, guys. Trading successfully doesn't mean you know what's going to happen. Crypto Twitter and what? God, some of the worst stuff out there, guys. It'll make you believe the dumbest things. And if you're fortunate enough to make it through trading for a while, for a few years of doing it correctly, you'll notice the dumb things that are said. But until then, a lot of these dumb things to retail traders who have no clue what they're doing sound like they make sense. And it's a tough thing if you're new to trading, because it sounds like it makes sense. But once you've been in for a while, you know it doesn't. So this is kind of where we're at with that. I haven't been talking. Let me see what you guys have got going on here. Claus, what's up? He said Musk should be more careful. Basically, he's market manipulating and he knows it. Etsy popped 20% back then. Yeah. Again, guys, I can't promise you that I know what he's thinking, but I don't have to know what he's doing or what he's thinking. All I have to know is what's the possibility. And if we look at where we are in terms of all the markets right now, the stock market, Bitcoin, everything that's there, people are extremely euphoric. There's a very frothiness to the markets right now, which should warn you that there's potentially a top either in or around this area. Maybe coming, maybe it's already in. But if you're not noticing the frothiness and the euphoria that's going on right now, you're at a severe disadvantage. I would have to suspect that Elon Musk knows what he's doing. And I like Elon Musk enough as far as his ideas and his ability to think ahead go. They're great. But personally, I also get this feeling that he would love to be king. So we talk about Mars colonies all the time. I don't think it would be a free colony out there. I think it would be one Mars under Elon. And if I'm right in that, then what's going on with right now with Bitcoin? I don't think it's anything about free markets or anything. I think it's about him manipulating it to his benefit. Potentially. Again, I don't know, guys. But just based on the way things are and the way things are said and the way things go on, I could be completely wrong. But it does make me cautious. Why? Because I've been doing this long enough that I don't want to lose all my money. Rule number 1, protect your capital. Rule number 2, grow your capital. Why is rule number 1 protect your capital? Because if you don't, you can't possibly grow it. How are you going to grow your capital if you have no capital left? The first thing you should absolutely be thinking about is risk management at all times in the market. All right? Let's see here. Let me see here. Mac the man says he doesn't think it's fair to say that this popped up $5,000 because of Elon. Well, I think it is. if you look at when he mentioned, when he did his Bitcoin thing on there, I don't know. Did it happen before there? I don't know. Maybe you have a point. Maybe you have a point. This is 2 a.m. Does anybody know when he actually changed? At what time he actually changed his thing there? What do you say? Maybe I'm wrong on that. Maybe. Let me see here. I'm willing to say that. That's all right. Where is his it's inevitable tweet there? Did I miss it? Let me see here. In retrospect, it was inevitable 9 hours ago. 9 hours ago was about 2 or 3 a.m. 2 a.m. So, I don't know. I think there's an argument to be made. Right here. This is 2:30 a.m. That about aligns with the time that he did that. Apparently, from what I could find out, this change up here came about around the time that he said it's in retrospect, it was inevitable right here. Now, again, I haven't been able to actually verify that. I've just been going through all the news sources that I could find. That seems to be the timing. If it's correct, then I think the argument that he didn't cause this right here, that didn't cause it, I think is off. I mean, if we look here, you said bullish divergences everywhere. Nothing on the 30-minute. Nothing on the 1 hour. Nothing on the 2 hour. No bullish divergences on the 4 hour here. Matter of fact, the only bullish divergence on the 4 hour is back here at the swing low. So I think you might be mistaken on that. I think. It does appear that the move up coincides with his tweet and his changing of that. I can't find any bullish divergences going on at that time. Let me see here. Let me kind of catch up with you guys here. But anyway, let me see here. Hank says that the Elon tweet was about something else. Could have been, but apparently the timing of it, from everything I can find, was around the time that he changed to the Bitcoin logo thing on his profile. So, we just look at that. It could have been something else, but what does the market think? Did the market believe? See, here's the other thing. You got to think, in his particular position, how do people perceive it? If the market believed, because the timing of this was around the timing of the change of here, if the market believes that this comment has to do with that and brings it up there and brings their attention to it, doesn't matter what that was really about. It's what does the market think? But it really comes down to the market, I believe, saw this here. This seems to be the thing. And that's when it popped up. So is it bullish? I don't necessarily think so. And I've given you what we're watching for here. If price can get above this swing high, then the market structure from January 8th changes from bearish and it starts looking bullish. And at that point, you're looking up at least around 47,000. Locally, if you get a reversal off this 35,080 level for a wave 4, you should expect a minimum wave 5 of 40,900. Now, as far as bullishness goes, those of you that follow me, I often talk about this. When you have a correction, your first 5-wave set most often will terminate around the wave of the larger degrees termination area. So basically, if this is going to continue going up, this is probably 3 instead of 5. So this is 3, this is 4, and then we're working on a 5 here, which means wave 1 of 5 is going to terminate around where wave 3 ended. And that's about where we're projected to get. Now, that doesn't mean you can't overextend on 5 or anything like that, but makes a good case for it. So I'm not saying that it's definitely bearish here. I'm saying that if it does follow through here, the projections, it's what we would normally expect for a bullish advance off a correction. But until it gets above that point, it's very much possible this be a 1-2, 1-2. And this 1-2 right here terminated just above the 70.5 retracement of this wave 1. And you guys, I've talked about it often. 70.5 is that institutional level where they're usually looking for retracements. So I love that level for this reason. So this is what you have to pay attention to. There is no guarantee whether this is bullish or bearish or anything until we get a move up above there or a move down below here, where I already talked about. So yeah. Is that Blender? What's going on, man? He says, I saw it live the minute everybody tweeted about Elon, it started. Yeah, that like I said, I was sleeping, guys. But everything I could find out this morning online, all the news sites or whatever I could figure out, that seemed to be the what happened, that was around the time it happened. So, again, retail traders come in and they often think they have to know what's going on in the market, guys. You don't have to know. Risk management is the name of the game as a trader. And he who does, or she who does the risk management the best, is going to be the biggest winner. It's really what it comes down to. I tell you guys time and time again, risk management is where you make your money. You don't have to know where price is going because it's impossible to guarantee it. But what you can guarantee is where your invalidation and validation levels are and proper risk management. And if you do that, it puts you well far ahead of any other retail traders out there. It's the key difference. Think about it, guys. If you're not doing these things I'm talking about, think about it. You're doing exactly the opposite, right? And your results are not where you'd like them to be, right? You may get lucky every once in a while. We all get lucky. But you cannot remain a trader on luck. You have to develop a system that consistently produces profit over time. That doesn't mean every trade's profitable, but that means over a span of period of time, you're profitable. You're continuing to increase your capital account. If you can do that, then compounding in time are what make you wealthy. But the key is developing a system. Not every single trade, not trying to figure out every single trade as it does. Developing a system that works consistently. And again, if you're not doing that right now, notice what I'm saying compared to what you're doing. There's a lot to be said for it, guys. Let me see here. Let's see here. The Last Samurai mentioning the ABC will typically retrace 50%, but you often see a deep C, maybe 78.6 or 88 on the first full swing. Then you get 50% or 38.2 if you're lucky. Drawdown and risk is a huge factor. Are you talking about on a wave 2? Yeah, wave 2, wave 2 is usually, especially in Bitcoin, they usually hit that 70.5 level, sometimes the 78.6. Occasionally the 88.6. I know Hank loves that level. Stock markets, Forex and whatever, there's still a lot around the 61.8. But you're starting to see some movement to 70.5 now. Yeah. Hank says, so he said he figured he had this move already here, so either he can predict what Elon will be doing, or it was already in the charts. Go figure, already in the charts, right? Don't I always talk about that? You have the news events which create knee-jerk reactions, but they're often at areas we've already talked about. Remember, guys, I put that chart out there in 2019 about what we're seeing in the Dow Jones right now, that widening, broadening megaphone shape. I did that in December of 2019, and I talked about it for 6 months prior, from about April or May onward. I just finally got around to posting it. Anybody that was following back then, you saw me. I was talking about live on YouTube. And that was, of course, 2 years before we are now. It was the $30,000 to the $18,000 area and back up. And that's what we've done. The market, everything's into the markets, guys. Everything's priced in because it's all about cycles. It's all about that socioeconomic theory. It's all about cycles, guys. News events, again, guys, I've talked about this before. News events happen all the time. Price movement happens all the time. We only associate the two when we want to. But either news events make things happen, determine market action, or it doesn't. And if it only works sometimes, because there's lots of times out there where you have huge news events and the opposite of what should happen happens. Again, I've talked about tons of these. You guys, you need to go get this book. Socioeconomic Theory of Finance. I love this book because, man, oh man, everything that I learned over the last 25 years, most of what I've learned is basically in that book. Except that book was just printed a few years back. I just came across it last year, those of you who remember. It's by Robert Prechter. He's the head of Elliott Wave Institute, one of the de facto Elliott Wave guys in the world. And I'm so fortunate. He actually signed that book for me. I love it. But it's so amazing for me to see that everything that I had to go through over the last 25 years to get to this mindset and this understanding of the markets, and it's basically summed up in that book for the most part. It's an easy read too. It's a long read, but it's an easy read. I'm telling you guys, you should get it if you haven't. I'll be giving away some copies, guys. I've got multiple copies. I'll probably be giving away starting next month and some other socioeconomic stuff as well, as we launch another brand that we're going to have coming out next, I think probably next month. So be watching for that. But yeah, so can you recommend any readings or books on cycles? Train, man, I'm right there with you, buddy. Yeah, there's one. Let me do this. I've actually got, we keep a list here because it's the easiest way to do it. Let me see here. And I'll put this link here for you guys, and that way, you can either click on it here or copy it down or whatever. Yeah, let's go right here. Share your storefront. There we go. Oops. All right. So actually, it's right here's the link. It's on Amazon because it's an easy link to the books and everything that we have there. There it goes. Amazon.com/shop/Texas West Capital. And within that, what we've got here, let me see here. Let me see if I can find what I'm looking for exactly. I'll pull it right up here for you, and I'll talk about some of the cycle books that I think are good reads, things that I've read, and I've already gone over. By the way, guys, if I've got a book listed in here, it's something I've already read, and what I think the things should be in there. Oh, doggone it. Let me find it over here. I'll pull it up here for you guys. Sorry, computer's running just a bit slow here. I got so many tabs running all the time. Let's see. All right. Oh, come on. There we go. So here's the page here real quick, guys. And so here's some of the software that I use and the hardware that I use. If you guys are interested in that, people have asked me about it time and time again, so I'll put that there. So good things about cycles that you should be reading. This is a great book, Baby Boomers, Generation X, and Social Cycles. The K cycle right here. I've got a couple of different versions in here of these different things, but this is a great, absolutely great thing. It's another way to look at cycles. Read The Fourth Turning. This will give you a better understanding of what's really going on with everything right now. If you've paid attention, it's not just what's going on in the financial markets right now, but it's also what's happened with political, with politics here over the last year. All these worldwide, all these these demonstrations and then of course what we had here in the U.S. recently with the Capitol and all this stuff. I'm telling you right now, this is a great idea. Everything works in the idea of cycles. Some other stuff, the collapse and complex of societies. The collapse of complex societies is a great one. This is socioeconomic theory right here that I told you about. Elliott Wave, of course, Elliott Wave books. Anything here on the Wyckoff method. Some of these are original writings and they're very inexpensive. They're great because they help you understand cycles in the market in terms of the big players. Again, what I was pointing out with the volume and price action earlier, it's a great place to do that as well. So as you can see, most of these are on there. Now I've got some other things here. If you really want to learn more about options, this is an academic textbook actually here. Options, futures, and others derivatives. If you can handle that kind of thing, that's a great book to have. Dark Pools talks about the other side of trading that you may not know about. It's a very interesting read if you don't know about that stuff. Bank Liquidity Creation and Financial Crisis is another good book that I think is pretty good with what's going on nowadays in terms of what I talk about in terms of credit and everything that's going on there. And of course, just an overall rounding of macroeconomics is Applied Financial Macroeconomics and Investment Strategy is a good book there. Again, this is more of a textbook than anything else. But if you're really interested in these things, these are great things to read. I really need to update these. I've got more books I'd like to put on here, but I have read every one of these books, and so that's why I recommend them. I know that they're good quality and good stuff that's going on. And then, of course, things about market profile here, which is more shorter term trading, and down here, volume price analysis, point and figure stuff. So yeah, that's what I would look if I were y'all going on that. All right. Do I have a 49 inch? Yes, I have a 49 inch monitor. Yeah. Curve monitor. It's the one that's linked in there, the LG. I was running 3 monitors across prior to that. And so, no, was it 4? No, 3. And so I just got this and it works a lot better with it there. Let me see here. I don't know about balling. It just, again, for me, it was this whole idea of just having screen space because I do so much throughout the day. I like it. I would suggest if you don't have it and you can afford it to get it, there are other options out there. If you go into that and you kind of click on that link in there for that one, and it'll take you to Amazon there. And then if you look down at the bottom, it'll have other comparable monitors. But I think it definitely helps a lot. I've been one of those guys that have run multiple monitors for, decades now. And it's so much cleaner and easier to see with just one screen. So yeah. Train, you're very welcome. Sure. Cryptophagia suggests The Misbehavior of Markets, a Fractal View of Risk, Ruin, and Reward by Benoit Mandelbrot. I have not read that one yet. Thank you for bringing that up. I'm going to check that one out for sure. So here we go with this. So that's Bitcoin. The DXY, guys, that continues to be the thing that's driving all things. I've updated the local count here. It looks like we've got an expanding leading diagonal here, expanding wedge. That we got 5, and then we have an A, a B, and it looks like we might have a 1, 2, 3, 4, 5. If we can get a move back here above this 90.77 kind of area up here, 90.77 or 78, that should kind of confirm that this bottom's in here. And in this case, we'll be looking for minimum wave 3 up here at 91.709. That takes us above wave 4 and the descending resistance. And at that point, I think you're hard pressed to argue that there's any further downside. This is the strong resistance that's been in since March of last year when we had the dip, which of course the DXY rose with that. We have a lot of moving sideways here as we continue to advance. And generally that aligns with the thought that the bottom's here. And what you have here is rotation. You have position changes from those who were bearish, starting to move more and more into bullish, which should lead to a pop up. And this wave 3, this is wave 3 of the larger wave 3. So wave 3 in this case would be subdividing. So you're going to get a larger wave numeral 3, 1, 2, 3, because of this subdivision here. And so with that, because this would just become one of this larger 3 here. And that makes a lot of sense in terms of the explosion you expect out of this long-term resistance. It's been almost a year in the making. We've hit it multiple times. So break through that should expect to have a strong move up. If that's going to move up, Bitcoin, everything else, there's no reason for them to continue higher because they're losing value. They're denominated in dollars. And as long as the value of the dollar is rising rapidly, the value of those other things is going to drop rapidly because you have a more expensive dollar. Your dollars are worth more. So your products, your things that are denominated in dollars are going to lose value as the dollar gains value. It takes less dollars to buy those things. And that's why that happens. Now, so where are we at? Well, let me see here. I have got, let's see what I've got here. Let me kind of scroll over and see if I can get Discord working here. Oh, come on now. Okay, maybe not. Let's try this. Discord's freezing up on me a bit here. Let's look at the NASDAQ here. Man, I should have reset these browsers. I apologize, guys. I've run so many tabs that especially so many with TradingView on them, that the browser ends up bogging down a bit. It's completely on me. Oh, look at that. I think price is making a good argument for the top potentially being in. But as I've mentioned before, you really need to get below that wave 4 to really kind of feel like it. On this right here, we had a minimum wave 3 target of 12,959 here. As you can see, we've continued to go through it here. So we've probably got like a 1-2, 1-2. If it's a 1-2, 1-2 like that, like similar to longer term Bitcoin right now, right? See this blue line down here, this 12,595. So what I told Discord this morning when I did this update, I said this is the minimum target here, but I said if we continue on through that, we're probably looking closer to this 12,595, and that's why, because it would be a 1-2, 1-2 as it continues down there. Oh, I'm sorry, a 1-2, 1-2 here. And then you get, your 3, 4, 5, which gives you 1, 2, 3, 4, 5. But as you can see, it gets down below that level there. That's just one right there. We've also got the S&P E-minis that we do every day, a couple of times a day. And what's going on there? Again, big drop here. We had all this set up, so this all worked out well. Looks like we've got a 1-2, and then working down with a minimum wave 3 down here of 35.66. Strong sell-offs going here. Now we go to the Dow Jones, which is a broad market index, whereas NASDAQ is very tech heavy, and S&P is even quite tech heavy. The Dow Jones has a broader group of stocks. They're not just tech heavy stocks in its thing here, and here we are already. Again, looking at a 1-2, 1-2. We've dropped through the descending, or the ascending support here. We've got a minimum wave 3 down here of 29,445. And as you can see, we really need to get locally. The first thing we want to do is get below this wave 4. This is that local wave 4 on the way up. And so we've almost done that, but really what you're looking for is to get below this wave 4. This wave E of wave 4 here. The termination point. 29,599 and 30 cents. You're getting below that. That should be the first clue that the top is in. So again, market's dropping like that there. Clark, man, yeah, I'll take a look at silver, man. For sure. Hey, don't forget, Clark, man, check out the silver updates that I have there, and I know you're in there with Discord with us. Check out the silver updates that I did this morning. Yeah. Let's see here. Coming on here. What else we got? Let's look at oil here real quick. Oil. And kind of close all this off over here so we got more screen real estate. Oil's been doing this crazy thing here, man. I'm going to be honest with you. This has been difficult to kind of count as we've been doing this here. But, we're either in an A, B, C, or we're working as a 1, 2 and working down. So for right now, it looks like locally here we've got a 1, 2, 1, 2. Again, you notice this is showing up across all the different markets, right? I think if this 1-2 plays out across one of those markets, I think it'll be, the rest of them will follow through. And it seems to be playing across stocks right now. So we'll see how it goes. But really what we're looking for is a decline below wave 1 here. This small wave 1 here, which is minuscule wave 1 at 51.93. If we can drop below that, again, then we should have our, our 3 down here around 50.56 as we're coming down that. But this would only be, this wave 5 here at around 49.90 would only be wave 1 of 1, 2, 3 down here. It should just be wave 1 of 3. Otherwise, like I said, it's an A, B, C, and we're probably looking at that as a C, and then we'll reverse and head up. If we've got a strong dollar movement up, though, again, we're looking at oil priced in dollars. So the odds are likely that oil will continue to drop further. Let me see here. Hey, Crypto Mowgli, have a great weekend, my friend. Take care. Take care. Let me see here. If we do look at silver here, let's take a look at silver again real quick. Or I say again. Again as in, we looked at it before. So right now, locally, what I'm seeing is a deep, if this count is correct, this is a deep retracement on 90%. So I'm iffy about the count at the moment. Okay? But I've got it potentially as a 1, 2, 1, 2, right? In this case, if this count is correct, let me see here. Yeah, we had a higher high off that. If it's correct, then what we're looking for first is a decline below. Basically, you'd be looking at this as a 1, 2, probably a 3, 4, and then a 5. So what you want to see is a decline below what is wave 4, which would be this swing low here. $25.70.5. If we can get below that, that's the first clue this maybe local top is in. Continued decline below wave B here at about $24.71.5. Continued decline below that would add a lot of confidence to that count. And then, of course, a drop down below wave 1 really kind of sets it in. None of that guarantees that the count is correct, but as we get through wave 4, then wave B, then wave 1 here, you're gaining more and more confidence that the count is correct. Now, here's the thing. It doesn't have to end here. So let me zoom out here a bit. Excuse me. Notice on the daily here, we've still got some room we could pop up into overbought. We've got, we're up here in overbought on Stochastic RSI, but we've got room for it to go up higher. So it could continue to go up higher. So it is possible that that maybe we have an A, a B, or in this, an A, a B, and this is maybe a 1, 2, 3, 4, and we've got a 5 going up above this swing high here. So this count is invalidated if price goes above this swing high over here at $28.10.5. In that case, it's possible that wave 2 is not complete yet, and it's got a little bit further to go up here. But if it goes up above this swing high over here, this $29.91.5, then that invalidates this bullish count or this bearish count we have going on, and it suggests that we've got that this here was maybe the low of the correction, and we've got what amounts to potentially a 1, 2, 3, 4, 5 coming up here. And as I've talked about previously, we'd be looking at this target up here, this EQ, at least at $31.64 as an initial target, but potentially higher than that. So it just comes on, what do we get here? Do we get the reversal and continue down below here? Or do we get the continuation up through here? And if we get it up through here, does it continue up then above that swing high there? And that's how we trade it. Simple as that, guys. It's not complicated. Easy levels, back and forth, easy done. Right now what we have here is we have an advance, and we have a 4-hour bearish engulfing candle right now. By itself, it's just a pause. If we have another supply side candle coming in following this on the next 4 hours, then we can look at this as a bearish engulfing leading to a reversal. But as long as this is the only one, if we have all of a sudden a bullish candle in the next one, this was just a pause and we'll potentially be heading up higher there. It's over there. Let me see here. Let's see here. Last Samurai, you said the U.S. dollar against the yen daily ABC correction looks okay for a sell. Well, let me show you what I'm looking at on USD yen. This is something we update a couple of times a day. Yeah, USD yen. So right now we're doing pretty good. We've been looking at further upside since the lows. We've been doing really good on all that. Right now, I've got a possible 1, 2, working on a 3 of this 3 maybe. Now, I've got 2 different counts here. I've got the black count and the red count. I'm leaning toward the red count. So what happens is this red line here, this 104.542, was the 1618 extension of wave, of wave 1 here. So normally that's where we look for wave 3. But there was very little in the terms of pullback there and up here, and it looks like it's just consolidated before pushing higher. So what happens is if you're doing Elliott Wave and wave 3, the price goes beyond 1618, you generally look at 2618 as your next level. So 2618 is this up here at 105.176. So I'm watching here. If we advance above this swing high here at 104.918, then I'm looking at the red count, which has this what we call subdivision here in wave 3, making it overextend. And an overextension of wave 3 is bullish, when it's going up here. If it was going down, it was an overextension of wave 3, it would be bearish, significantly more so. But you're getting a lot of buy-in still in here heading up. Again, with the account here, you're looking for an advance above. As you can see, I'll zoom out here, but you know what? Let me kind of take a different time frame here. Here we go, coming on down. And so if we're looking here, excuse me, then what I've got here, coming off of this particular area here, I've got another count over here, but I haven't put that on this one yet, some other chart. But I've got it as an A, B, C here. And so if that's the case, then the move above B here should add confidence to the idea that the bottom is in. Now remember, you don't want to look at USD yen, Euro USD, USD Swiss franc, all these particular pairs, these Forex pairs, you don't want to look at them out of context with the DXY. Why? Because the DXY, how do you get the value of the DXY? Well, what you do is you take the value of the dollar and you compare it against a basket of currencies. Or I guess basically what you're doing is the DXY is made up of a basket of currencies. This is what I'm trying to say. And so 58% of the value of that basket of currencies is attributed to your Euro USD. Another 11% or so is contributed to USD yen. I think the Swiss franc is around 4%, the USD Swiss franc. So if you see there's a reversal with the Euro USD, that adds a lot of confidence that the DXY is reversed and heading in the opposite direction. So if Euro USD is coming down, DXY should be heading up because the Euro USD makes up almost 60% of that value. If you have Euro USD coming down and USD yen going up, well, together, those make up 68%, 69%, almost 70% of that weighted basket that gives the value of the DXY. So if you have the Euro USD coming down and the USD yen going up, which is what we have, there's little reason to believe that the DXY is going to go down because that makes up most of the value of that basket. That gives you the DXY's value here. And that's what we have right now anyway. We have this strong move up right now of the yen here. Now, to what you said, it is possible it's still an ABC. So what would we do? Well, kind of go like this, measure out wave 1 there, pull it back to wave 2. And we should expect price to at least come up here around 105, 124. Because at that point, if this is an ABC, then wave C will be equal to wave A at that point. Now, price does not have to get there, and it can be an ABC and still go above it or stop below it. But again, with Elliott Wave, we look at these general relationships between waves. And so when we look for ABCs, generally we look for that 100% extension of wave A, which again, you will notice that's finding confluence up here with this potential wave 3 of what may end up being just one of 3 here, of this 3. So yeah, it is possible. It's only an ABC at the moment. So we'll have to continue to see how it plays out. But right now, the way in which it's advancing appears to be bullish. So we continue to watch that bullish move as it goes there. The Euro USD is the other one. And so your Euro USD, I've got this right here right now. Basically looking at a potential 1-2, but could also be a 1 with an A, a B, and a C heading up higher here. So we'll see what goes on here. We'll see if we decline back here and head on down, or if we push above that swing high there. That'll tell us more about what we need to know. But right now it appears to be a leading diagonal coming off here. But you might be able to make a case for an A, B, C maybe here. So what you really want to see overall is a decline below the swing low here to really say, well, it looks like we're probably, topped out here. And so that's where we're kind of going with that. If you get above this swing, this wave 2 up here, then it's possible again that you've got an A, a B, and a C heading up. But, again, even then you're still looking at potentially a bullish, just a corrective wave 2. Which would have you looking at probably, let me flip this around real quick. Probably this 65 area here. This is this higher volume node at around 122.467. That's probably a good place, though it could potentially go to 78.6. But I'm usually looking at this 61.8 to 70.5 range as the first target. Now, on the side of potential bearishness on this is the fact that we've got this larger, higher volume node here that you see. There we go. And that's exactly where price got rejected there. So this is a strong statement to the idea that price is potentially headed down further. It has to overcome this high volume node here to really start looking at potentially heading up higher. As long as it can't get above this, your buy should be to the downside. We can also look at a possible resistance right here, this red line. And I guess I can change that to a more solid line, something easier to see. Right there, comes off the top here, and the top here, the top here. So 3 touches makes it a trend line. So advancing above it would be a bullish move. But it may just be a bullish move within a larger bearish correction. So you just play the levels as it goes. So that's kind of where we are with those. But again, as long as Euro USD continues to head down and USD Yen continues to head up, there's no reason to think that the DXY is not going to continue to head up. Because again, those together make up almost 70% of the weighted value of the DXY. So hopefully it makes sense, guys. Let me see here. Let's see here. Oh, yeah, you're welcome. For sure, for sure. Let's see here. You do pay attention to the DXY, Euro, VIX, and... Okay, yeah, for straight thought. Okay. Clark, man, have a great day, bud. Let's see here. TV Canal says, I long from 30 when bears don't have the power to go. Makes a new low. We finish ABC regular flat, and we go stop at 1618. So it is bullish. Don't think yet because we are still at the 70.5 fib from the top when Bitcoin likes this. Okay, yeah. Yeah, Last Samurai for sure. Again, guys, the one thing I want you to understand here is I'm not going to come off here like most of those guys that you watch on time that tell you they definitely know what's going to happen. I have no clue what's going to happen for sure. Okay, I can't say I have no clue, whatever. I have my opinions based on the things that I explained to you and the general expectations, general relationships between movements that we have. And then, of course, when we look at the whole socioeconomic side of it, what's going on in the world, what's going on with people, what's going, all this. This is the real sentiment. Not the little, oh, everybody in my feed is bearish, so I'm going to be bullish nonsense. Stop doing that if you do that. Remember, your social media feeds are curated for you. They do not show what's really going on. They show what they think that you want to see. Okay? But the real market sentiment, the real sentiment of what's going on with people, that's shown in what's going on with the riots over the last year, what's going on with the protesting, what's going on with the thing here in the U.S. that happened with the Capitol, what's going on in the Netherlands that happened with the government just going, oh, we quit, we screwed up, we quit, we're in trouble. What's going on with Wall Street bets, stuff like that. This is the real sentiment of what's going on. This is really what's going on. And this tells you that people in the world have just about had it up with governments. Now, this is a cycle thing that happens every so often. Again, read that book, The Fourth Turning. Go to that link on my thing there and you can get to it directly. It's a great book, but it helps you understand more of what's going on just with society in general. By the way, we've got this potential kind of descending channel thing going on here on what's this called, on the DXY here. So we've got that still too. Oh man, that drop it's not looking great. I'm going to be honest with you. This is not looking entirely positive at the moment. There's still an hour and 30 minutes left to go on this 4-hour candle. But if you're getting price closing near the bottom of that candle after this particular kind of top, where you've got the move up here, the big doji, and then also the large candle the other way, that's usually a big warning to be careful about longing, but you still want to see confirmation with the next candle down. The 1 hour just continues to show, down, down, down here. It's still got further to go here on the Stochk RSI. RSI, of course, can fall further. I think my thought is we might get a bounce around this 33,940, 33,950 kind of area here. That's kind of where you've got this activity going on back over here. And at that point, I think what we would have here would be higher lows here and lower lows with the oscillator, which gives you hidden bullish divergence. So that might be enough for at least a bounce. But it might just be a 1, 2, 3, 4, 5 to get you down here around this 39, 29,500 area, 30,000, 29.5 area. Again, the idea that you got 5 waves down, coming to that wave with a larger degree. Bounce back up 3 and then come on down through it potentially. So we'll see. Again, if it moves up through this high here, well, things are open. We just need to get above that swing high over there, that 40,127.66 on Coinbase. Whatever exchange you're using, it's that same high that you would need to get above. Let me see here. Checking in for the Netherlands. This is WTF. Luckily, things calmed down a bit. Oh, man, I'm glad to hear that. I've got a few members in Discord that are from the Netherlands, and they've been talking to me about what's going on there. And, man, I feel for you guys, man. It's tough things, stuff that's been going on, really. Here in the U.S., we're dealing with our own thing, but you guys had the whole government thing. Oh, my gosh. I can't even imagine. So just continue to stay safe out there. I want you guys to continue to come back. Let me see here. Do I actually support BLM or was I just joking? I think you're talking to me, GDK. I really don't support anybody politically. It's too much. The idea of being a part of a cause emotionally makes you feel like you have to accept everything that cause believes and the way in which they go about doing the things they do. I've never been a great team player in that respect. I'm very much independent. So yeah, I I don't really support. I mean, I can support the ideas, but when you get groups involved, usually there's an ulterior motive or there becomes one. And I'm not a fan of that at all. I'm a fan of, if this is your first time here, or maybe you haven't heard me before, I'm a fan of the individual. I'm a big believer in people in general. Groups cause issues. Groups cause problems. But people individually often are where it's at. So that's what I believe in. The people themselves, individuals. Hope that makes sense. Let me see here. Let me see. King Frank, what's going on? You say buy low and sell high, but how do you know when to buy? Well, there's lots of different ways to know. Much too much to talk about right here. But if you join us at howtotradetowin.com, you'll get a whole big old education on it. Well over 50 hours of educational material, guys. Helping you understand markets and what's going on with them, how to look at them correctly rather than as retail traders. And then, of course, I have all my commentary and everything that I do when people are asking questions and whatnot, about things that involve, the legal aspects of what's going on with Robinhood or what WSB is doing, things like that. And, of course, my opinions are just that they're my opinions. I do have a law degree, but, again, the idea of law here in the U.S. is that it's very gray. And so it always depends on how you present your case. What are your facts? If there is a similar case decided before you that has the same kind of points to it, the same kind of parts to it, then the judge will generally decide in favor of whatever that previous decisions were. Depending on if it was within their district or some other district or whatever. It's a whole bunch of fun stuff about the way it's decided. But if you can approach a law that's already been decided in a new and novel way, with different facts and whatnot, then there's a chance that in your case you can win, even though generally that idea has been is lost in court. But it would only be the decision would only really pertain to cases in which they had the similar things that you're talking about, the similar points that you bring up as you bring them up. Anything else that was the other way would still be decided the other way. It's crazy the way it is. But, it's fun. It's a little fun to pontificate on law. What's going on, maybe? Do I listen to Ben Shapiro? I don't listen to a lot, guys. I honestly don't have much time with what we do with TWC and everything. I'll be honest with you. I don't have a lot of time to listen to a lot of other stuff. I wish I did. But sometimes, our members will say, hey, listen, I saw this. What do you think about what he says at this point in there? And so I'll give it a listen, kind of listen through it and see where he's trying to get to and then give my thoughts. But yeah, I don't really have anybody that I have the time to listen to on any kind of consistent basis, unfortunately. Y'all saying, well, don't go there about politics. Yeah. Like I said, guys, I'm not about politics. I'm not a big believer in political systems and groups and whatnot. If you want to know politics from me, I believe in the individual. There you go. That's it. Derive from it what you may. You'll probably be wrong on most of it, but go ahead and derive from it what you may. Let me see here. You just follow me, King Frank? Hey, I appreciate that, man. Let me see here. So, this is kind of what we're doing here. Let me see. Hayden says, would this be a good example of the doji technique you recently taught on the H4? It's setting it up for you, yeah. Hayden's talking about a technique I taught. If you guys don't know, for Tier 3 members, every Wednesday at 4 p.m. Central Standard Time, I do an hour-long live stream that we then archive if people can't be around to watch it live or they want to watch it again. But I usually detail a tip or a trick or a technique for traders that assumes you have no knowledge of trading to begin with. And so that way, people who are just learning to trade are able to find these little systems that they can maybe use successfully for themselves while they're learning in our other educational material about the broader ideas of the market and how things work, and maybe how to use Wyckoff or how to use Elliott Wave or something like that. So that's something we just taught this past week. By the way, guys, if you join Tier 3, you have access to everything we've taught. We started this Tier 3 thing, the weekly training thing, probably about 4 months ago, I guess, almost 5 months ago now. And so we've got everything archived from every week since then. So you'll have instant access to all of that, plus all our other educational stuff, plus our hot takes, which are our setups that we do during the week, plus the chart requests, which we do. I think I've charted 50 or so chart requests over the last week at least, I think. It's been quite a bit. I don't know how many for sure, but yeah, it's been quite a bit just on the chart requests. So a lot of information either way, guys, with Tier 3. Like I said, you can get in for 25% off right now and kind of see why people really hang around with us and stick around with us. Let me see here. Ross Mark says the problem with common law is that if the previous judge was a donkey, and a whole bunch of ellipses there. It's just, people are people, and they view things. I want you guys to understand something. Again, my background is seeking to understand people and systems and whatnot. So that's my educational background and beyond. At the end of the day, we all view the world through our experiences, okay? The way in which we view the world or the markets is really starts with how do we view the world in general. So what kind of beliefs do we have that are from our social circle, from our family, from our education? All those things develop how we see the world, and then from there we kind of make decisions based on the way we start and believe in it. I think judges in general, at least for the most part in general, try to do what they believe is right. But just like PhDs and graduates and whatnot who do the research, if your premise is mistaken, if what you believe is not correct or is different, then your result, the result that you get to is going to be tainted by that. So yeah. What do I think? My opinion on using Metcalfe's law to determine the value of Bitcoin, maybe combined with the MVT. I'm not so much a fan. I mean, I see its merits. I think I would need to see how Bitcoin goes from here. Is this a larger wave 2 correction as we've talked about before? Or is wave 2 already done and we're heading up, so we're doing money? And I think on that it will determine more about how we feel about Metcalfe's law, especially with NVT. Because again, at the end of the day, if we're still in a large wave 2 correction of some sort, then things that are happening, all of a sudden, all that MVT stuff and everything is going to turn out differently. Everybody's talking about all these on-chain metrics. Well, on-chain metrics only tell you what has happened. And you can derive what may happen based on what's happened in the past. But if the particular cycle that you're at, point of cycle that you're at, is not similar to the points of cycle in the past, then your results are going to necessarily be different. And that's those ideas when you go, oh man, well that was supposed to mean this, but all of a sudden it means something else. So yeah, I think there's a lot to be said with all that for sure. Do I agree that the value is related to the number of users? I think Bitcoin is still too new to really come to a real good conclusion on that. I think it's possible, but Bitcoin is still so new and still manipulatable. So many. There's a few people that own so much of it, right? That I think it at least should have you questioning whether that applies. So yeah, I think that's kind of how I look at it with that. What do I think of Gann and moon cycles? You wasted so much time there. I think cycles, I think that's what it's all about. It's, just in life in general, which just translates into the market. Because remember, guys, I'm going to tell you right now, what you see here, this price action here, all this price action, all this is a visual representation of greed, of fear and greed in the aggregate, in a large group of people. That's all this is. People give price here too much credit. Really, this is just a derivation of what a large group of people fear, whether fearful or greedy. Which again comes back, how do they feel about things in general? Again, that goes more toward that whole socioeconomic theory idea. So if we understand it in that way, then yeah, Gann cycles. I haven't done a whole lot of study on moons and stuff like that. But if we understand that as human beings, we are carbon-based, and so we are organic, that means we're susceptible to gravitational pulls and whatnot. And that gravitational pull, I can definitely see where it could cause changes in brain chemistry. Rising and lowering of brain chemistry, things that are going on in there, which then affect how you feel. And again, if the market's only a derivation of how you feel, just a visual representation of how you feel as a group, then it would make sense. Do I know anything specifically about it? No. But I can't discount it because, again, of us being carbon-based and being, our bodies are organic. So they're susceptible to things like gravitational pulls and other things that are going on. So yeah, I can see that. You almost spilled your drink on carbon-based? Blah, blah. What's going on? It says, doesn't it matter the sell bars versus the buy bars? Oh, why does my volume have one color? Oh, yeah. No. There's buying and selling going on here. These aren't buy bars and sell bars. All these tell you are the amount of volume. For every buy, there has to, for every buy order, there has to be a corresponding sell order. You cannot buy without somebody selling, and vice versa. You cannot sell without somebody buying. So this volume is just volume. I know that it comes out as green and red usually, but that's a big thing that's going to mess up your mind. Turn your colors off. If I can give any of y'all the biggest bit of hint on trading, turn off your colors. Make them black and white here, your bars. Make your volume down here black. It's just volume. Now, if you follow me enough, you'll start to learn the difference between market buying and selling and its effect on price, and limit order and selling and its effect on price. We talk about that all the time in Discord. But yeah, as far as volume goes here, it isn't buy volume or sell volume. All the volume tells you is, did price close above or below its open? That's all it's telling you. Yeah. Yeah, that's the meaning of volume. Volume just tells you how many transactions happened. So then you have to learn to decipher where volume is coming in terms of where price is coming in. So your volume and your price action relative to other areas of volume and price action and how it plays out. Again, this is what I was talking about earlier when I mentioned right here on the 4-hour, when I talked about the importance of noting this volume and price action right here. You have this exceptional spike of volume on this large candle spread. You see it closed much, much higher than where it opened. So you have a lot of volume and a lot of action and a lot of result. You get to this next one right here, and all of a sudden, you still have a lot of action, less than previously, but still significant, right? Maybe 70%, right? But look at how tiny that candle spread is. You have almost $5,000 worth of candle body here and only about $69, $70 here. So you have, in both cases, a significant amount of volume coming in, but you have very little result. So this tells us that in this candle right here, in this candle right here, the ratio of demand to supply, there was a lot more market buying going on here than market selling. In this one, there was a lot more market, or the difference between the market selling and market buying closed up. It became much more equal on still significant volume. So what does that mean? That means a lot of supply came in here. People are trying to sell into this right here. Big selling going in. And, of course, that results in what you're seeing right here. So, yeah. That's really what it is. Understanding supply and, volume and price action, I think, is really key to understanding where are your big players. Because where you see these strong bits of supply coming in, or strong bits of volume coming in, are usually your bigger players. Because they can't hide their footprints. That's the one thing they can't do. So my opinions about them come basically out of Wyckoff. So again, if you go to that bookstore, that book list I had, let me see here. This one right here. I'll just take this link that's up here. So if you go into that right there, again, and then come on over here to Understanding Financial Markets. These are books that I've read, and I think that you should read them if you're really interested in learning about markets and whatnot. But come on down here to where this Wyckoff stuff is. Studies and tape reading, trades about to happen, the Richard D. Wyckoff method of trading in stocks, charting the stock market, how I trade and invest in stocks and bonds, stock market technique 1 and 2. All these things here. All these books here really go into great detail about price action and volume and helping you understand the difference between where retail traders are and where the professionals are in the market. And that's the basis of my understanding of volume and price action there. So definitely something to read there. If you're long a big volume candle in the lows, it's a good thing. If you're short, it's a good thing to see big volume bars on the top. Yeah. So generally, I mean, there's a little bit more to it than that. There's more to it than just that. But that's a great place to start. Yeah. At least, if you're seeing large volume coming in at the bottom, these are the big boys buying. If you're seeing, big volume coming in toward the top, that's them selling. And guess what, guys? The big guys are always buying and selling. It helps create ranges so they can buy from you or sell to you. But there's a lot more into it than just that. But that's a great place to start. Sure, it's a great place to start. What top 3 books would I recommend there? If you're brand new to trading, man, I'll tell you what, I'm such a fan. I think if you have an overall standing of this, right, I think this is a great book, Socioeconomic Theory of Finance. Again, the reason why I like this book so much is because it took me the last 25 years to come to the same conclusions as what he's put in here, which, was again something that took him, decades to figure out too. So I would definitely say Socioeconomic Theory of Finance, just to get a real understanding of what's going on in the markets. As far as specifically what you could do, I think the Elliott Wave principle is a great place to start. That helps you define what's going on here into market movement and actionable trades. And then I think down here, these are by the way, these are very inexpensive books. They're the original writings, these $6, $16, $10 from Wyckoff from about 100 years ago. Still relevant today, believe it or not, guys. Still very, very relevant today. I don't think you can go wrong with any of them. They all kind of help to expand on what it is. I would think you could probably go ahead and get Stock Market Technique 1 and 2 together. Or you could probably get Trades About to Happen. I'm a big believer in getting the original down first. Because this is a modern adaptation of the Wyckoff method. So I think it's better. I think it's more important to get stock market technique 1 and 2 together. And so you have a real understanding from the man himself who developed the system. And then from there, you can get the other ones, is great. But from there, you go on to the trades about to happen, which is adding a little bit extra to it nowadays. But I think you should really kind of start with how it originally was developed, how he originally used it. And then you can move on to more modern, I think, adaptations of it. But I think those 3 books are probably best one there. If you want another one, I'd go for any of these on the K cycle here. The contradict cycle right here is pretty inexpensive. It's a good one as well. And if you just want more ideas on the overall, the ideas of larger cycles in humanity and societies and whatnot, I think once you go through the socioeconomic theory here, you go over here to the 4th turning, and that'll help you. And those few books right there, I think, will give you a better understanding than probably 98% of retail out there. Yeah. Let me see here. Should people not start with simple SR methods and understand how those work? Well, it depends. Do you want to understand how the market's working, or do you just want to try and trade a little bit? If you're asking me, then I think you should really understand how the market works. And I think that's where you start. My technique, how I look at supply and demand structures, I actually taught that during one of our weekly tier 3 things. And I think that's I think that is the easiest way to understand shorter term and even longer term targets with trading. And so I would suggest that if you're going to look at things like that, the idea of support and resistance and whatnot, I think I'm a little biased toward it, but I've had amazing feedback from our members that are using it now. And I think it's a great way to go. So yeah, I'd probably look at something like that. Why do I have Stoke? Oh man, blah blah's got a lot of questions here, huh? Glad to have you. Why do I have Stoke RSI? RSI isn't enough? Yeah, so basically the best way to think about RSI and Stoke RSI is a derivation, it's a derivative of price action. Stoke RSI is a derivative of RSI. So the best way to think of that, when you're looking, remember this is to define momentum. So your RSI tells you your general momentum. Your Stoke RSI tells you the degree of momentum. The other way to think about it is your RSI is, I hope you guys have driven sticks. I don't know standards. Most of y'all are probably pretty young. But if you've driven standards, your RSI is your engine, is your speedometer. Okay? Your Stoke RSI is your RPMs. It tells you how hot that momentum is. This just tells your overall momentum. This tells you how hot it's running. So it helps, the Stoke RSI helps you. RSI tells you, potentially which way you're going. RSI tells you if you're closer or not to a top or a bottom. It helps to ease that window smaller. Yeah. So anyway, yeah, I got that there. But I've got to get out of here, guys. I am done. Well, blah, blah. I'm glad to see that, you said you've been watching me a while and first time you've written. I'm glad you're writing. I'm just giving you a hard time about a lot of questions. It's no worries, man. I'm glad to have some questions here. But I need to go ahead and get out of here, guys. It's about 1 o'clock, 1 p.m. Central Standard Time here, so I need to get out of here. But, again, guys, you can get in with us here at howtotradetowin.com. When you get in there and you go to the checkout page, you go to join us, pick whatever you want, whatever tier you want and whatever you want. By the way, we have a monthly rate, but if you purchase more than 1 month, so if you go quarterly, biannually, or annually, you're going to get a large discount off that regular monthly rate. So you're already getting a discount there, and right now you can get an extra 25% off that. So when you get to the checkout page, you have a little button right here that says Welcome 2021, kind of a brownish button. You can click that, and it'll apply the discount to you. Or there's a box right up here that says, do you have a coupon code or whatever? You can just click on that and then type in Welcome 2021, and it'll get you in there. And again, worst case scenario, you join us for a month and you learn a ridiculous amount. We've got more content on Tier 3 than you can absorb in a month. I'm going to tell you that right now. But you can get a lot out of that month, a lot more than you can get anywhere else right now. So, if you're serious about trading and you really want to know how do markets work, how do you look at markets, how you should be looking at markets, if you want to get a better understanding of the basis of markets so that you can understand really what's going on with WSB and what's going on with, with Bitcoin and Musk and all these things, you can get it right there. Lots of stuff. Yes, you can still use the discount. Yes, Lamb, you sure can. You know me, man. I'll just go ahead and add you on there. If you're going to do that, by the way, guys, if you're already with us and you already have some time that you've already bought in and you're thinking about maybe buying some more, hit me up with a DM in Discord and let me know. And I'll go ahead and cancel your current membership. And then you can purchase the new one with the discount. And then I'll go back in and I'll add in any time that you had remaining from your current membership. I just did that for a few members as well. Because they wanted to, they were smart. They re-upped when the discount was there. But yeah, definitely. And, guys, do it. I mean, God, especially if you've been around a bit, your rates will just be stupid low. Anyway, so there you go, guys. Listen, I hope you guys have a great day. I really appreciate you guys spending time with me, asking questions, providing your thoughts. I just want you guys to know that, none of us out here, even the central banks, none of us know exactly what's going to happen. Okay? The best we can do is look at what's happened in the past and our understanding of how markets move and what goes on to get a better understanding of what may happen. All right? As a trader, there are no guarantees, guys. No guarantees. There's always going to be risk. So risk management is the most important thing you're ever going to do day in and day out as a trader. Don't ever forget that. That is where you make your money. All right? So as I always say, remember, the only thing you control in the market is how much you lose. That's it, guys. Y'all have a great weekend. Thanks so much for joining me and spending this time here. Hopefully I'll see y'all over in Discord, but if not, come on back Monday at 11 a.m. Central Standard Time, and we'll talk about Bitcoin and the dollar on that. Have a great weekend, guys. Trade safe.